You are seeing increasingly bipartisan support for clear common sense rules and regulations for this asset class. And so to the extent we are able to get both stablecoin and market structure bills through, I think that provides the legislative framework for this to be an asset class on a go forward basis. Like I said, things can shift on a dime and, we'll be watching out for what happens here. What stablecoins are is basically the first demonstration of tokenization at scale with just the tokenization of fiat currency on chain. I think one of the primary and most interesting use cases for stablecoins is the ability for people globally to hold US dollars. And I think that's a super interesting and compelling use case to give people more financial freedom. But I think that at these, kind of peaks of euphoria, we can think that aspects of this technology are going to take over everything. Maybe they will. I'm personally a little bit skeptical on some of the consumer use case side. In most evolved markets, you would expect the ratio of derivatives to spot trading to be 3 to 10x at the very high range. And in crypto today, that ratio is about 1.3x. So our belief is that there's significant room for growth as many more institutional market participants look to get active.
Hello and welcome everyone to a new episode of the New Money Podcast, the show where we, as usual, talk about crypto and find out, hopefully, how exactly the future of money looks like. I've got Austin Reid today with me, who is the Global Head of Revenue and Business at FalconX, a leading digital asset prime brokerage. Austin was one of the very early employees at the firm and kind of scaled the company to $1 trillion in annual trading volume. So we're speaking to an absolute behemoth of the industry. Excited for the conversation. We're going to talk about regulation. We're going to talk about stablecoins. We're going to talk about Austin's journey at the firm, the different roles that he's held. And I think it's going to be an interesting one. Austin, thanks for coming on the show.
Thanks so much for having me. Likewise, I'm looking forward to the conversation.
Awesome. So Austin, when we kind of talked to a couple of folks that you've worked alongside with in preparation of the conversation, they highlighted the many different roles that you've had at FalconX, right? Like you've been at the trading desk, you've been chief of staff, you've been in the product team, and now you're heading up business and revenue. Why do you think the commercial side stuck? Why do you think you end up here?
Great question. Look, I think from my perspective, I had the fortunate opportunity of joining FalconX when we were quite a small company, right? We were around 5 people, and that was almost 6.5, 7 years ago at this point. And the way I've thought through what I've tried to do through different periods of growth is just be most useful to the company and focus where we can be highest impact, right? And you can imagine that changes over time, right? When I first joined, we were really launching our first product, which was basically spot OTC crypto trading and solving slippage and large block execution for institutions in this space. And so a lot of that work was focused on the trading front. Then from there, we basically looked to scale up our go-to-market efforts. We had the product offering. We wanted to get more customers on, be in front of more institutions. And then over time, it's been a question of growing, scaling the platform, help lead our fundraisers, bringing more capital into the organization. And my current role today, really in its simplest form, I'm just focused on growing and scaling the company, right? And looking both at sales, go-to-market in different regions, expanding both in the United States and outside. And so I think I've had the fortunate opportunity to wear a lot of different hats, but for me, it kind of feels like a similar theme throughout, which is we're just trying to get the company in the next stages of growth. And within that, solve problems for our customers within the space.
No, I appreciate that. And let's talk about growth. I mean, I've just dropped the number. You guys hit 1 trillion in annual trading volume, which I think is kind of incredible to really picture. But where do you go from here, and how do you take this to 10 trillion, and what are kind of like the initiatives you're putting in place right now, maybe even in the second half of the year to drive it?
Yeah, great question. So to talk about the market a little bit and where we fit in it as well, as I'm sure you're well aware, we've seen significant acceleration in institutional adoption in the digital asset and crypto space, really since the release and approval of the Bitcoin ETFs a year and a half or so ago at this point. And the reason I give that context is the types of market participants that we've seen onboard to FalconX come into this space, continue to be the most sophisticated institutional players in the world and are solving a wide variety of different problems, whether that's accessing spot trading, derivatives trading, looking to basically borrow and increase the capital efficiency of their strategies. And so from a FalconX perspective, our primary goal is to be the institutional infrastructure enabling these market participants, whether those are asset managers, hedge funds, venture capital funds, who are active within the space to grow and scale their strategies. So for us, a couple of growth areas that we focused on, Our options trading business has grown substantially. We believe that regulated derivatives, specifically US regulated derivatives through our FalconX Bravo entity, which is a CFTC regulated swaps dealer, help wide variety of institutions get exposure and access to this space. So today we're about 12 to 15% of global crypto options volume. We want to continue to focus on growing and scaling that business and to scale the derivatives market, both in the United States and globally. And then we also see a significant opportunity on the credit side in terms of enabling institutional market participants to access more credit, or be able to access that across different exchange venues and collateralize different positions. And so those are some of the areas that we're focused on and some of the trends that we see across this market today.
Yeah, I appreciate that. Talk to me briefly about regulated derivatives. It's something that pops up again and again in the context of the show, right? We've had Bobby at Bitstamp here, who was keen on building something similar in Europe. We've had obviously Josh from One Trading here, who's kind of companies focused on bringing derivatives onshore into the European market. How does the US landscape work here, and why are you bullish on the play?
Totally. So on the regulated derivative side, where we started in this space was first registering FalconX Bravo as a CFTC regulated swaps dealer. And that happened probably about 2.5 years ago at this point. And our intention within that was to provide a regulated entity and vehicle for institutional market participants to be able to trade a wide variety of bilateral derivatives contracts, whether those are options, forwards, different swaps contracts as well. And our belief, to just zoom out from a market perspective, is if you look at most evolved markets, you would expect the ratio of derivatives to spot trading to be 3 to 10x at the very high range, right? There's a lot more derivatives trading that happens versus spot in most asset classes, specifically asset classes that have greater institutional activity and demand. And in crypto today, that ratio is about 1.3x. So our belief is that there's significant room for growth structurally as it relates to more derivatives activity happening within this market. And if you look at the US market specifically, as I'm sure you're well aware, the US market over time, CME has become a larger portion of the overall market, but the volume in the US is actually quite low in reference to the amount of that's happening globally in crypto. I think 85% of global crypto volume is actually happening outside of the United States today. But what we're seeing with the momentum on the regulatory side, market structure bill, net new institutions come in, is many more institutional market participants look to get active. And our belief is as that happens, you will see the derivatives market continue to grow and scale over time. And so we want to be a player that's focused on enabling that and enabling institutions to access this market in different ways.
That's interesting. If you think about, and I've heard this quite a bit, and I'm quite bought into this thesis. And if you look at the numbers, it's kind of reflective of retail being somewhat bearish, right? And I think like retail deposit volume is somewhat stagnant. It's not really breaking out, but institution is driving kind of like the growth and all the upside that is currently perceived in the market. If you had to like pinpoint a single initiative, item, historic event that drives and drove the institutional uptake, what would you say was like the pivotal moment here?
Yeah, I think one of the pivotal moments probably would point to two that we're seeing within this space right now. One we talked about a little bit already, which is basically the approval of Bitcoin ETFs in the United States. And I think what that provided was a regulated wrapper for a broad audience to get access to Bitcoin and to digital assets within that, right? And the success of that instrument, from my perspective, has been profound. You know, if I think through the conversations we were having about a quarter before the Bitcoin ETF was launched, I think the bull case in many analysts' mind was that you would see $20, $30 billion in inflows over the first year for those instruments. That ended over 100 billion, right? And so we've seen substantial momentum into Bitcoin ETFs specifically as an instrument. And I think part of the power of that instrument has been that it simply gave a regulated wrapper for people to access Bitcoin, right? And I think within that, that's been a catalyst to many more institutional market participants who may not be able to hold the physical, who don't want to go through the trouble of setting up spot crypto trading, crypto custody, whatever that is, to get exposure to this space. The second component, which I would say is ongoing right now, but there's been a decent amount of market momentum around, is the US taking a much more favorable approach to crypto and crypto regulation. And we really saw the trading activity around that start in Q4 around Trump's election to office. And I think what we're seeing and what our data says is if you look at our pipeline, the quality of institutional market participants that are coming in, people are preparing to grow and scale their strategies within this space. And the reason I say that's ongoing is obviously a lot of them continue to watch market structure bill and understand where that falls from a legislative perspective. A number are live today, but I think as we actually finalize those clear rules and regs, there's a significant amount of capital that continues to sit on the sidelines that will look to basically move into this asset class.
How do you feel about the kind of longer term outlook on the political opening towards crypto in the States, right? I think like we're all very bullish on obviously what happens from a regulatory point of view during the Trump administration. If you're kind of like in DC and people, and I wasn't aware of that when we ran these prep calls for the conversation, people told us you were actually quite involved in the regulatory conversation and were in DC quite a bit. But when you're in DC, do you have the feeling this is like a Trump thing, this is like a Republican push, or how bipartisan is the agenda, and how much do you think the pendulum is going to swing back in the other direction once momentum shifts?
Great question. And I think a lot of market participants are watching this. And this is why the bills and the legislation in Congress is very important. Because where we've seen an initial catalyst of momentum here was with the administration, and specifically more on the Republican side, look to basically enable innovation within the United States and have a push towards more favorable digital asset frameworks. I think the positive thing that I've noticed in my conversations and as this process has continued to evolve is you are seeing increasingly bipartisan support for clear common sense rules and regulations for this asset class. And so to the extent we are able to get both stablecoin and market structure bills through, I think that provides the legislative framework for this to be an asset class on a go forward basis. I think there's a lot of actually interesting components beyond just the investing side in terms of what that could enable for net new builders, innovation, other things happening within this market. If that happens, I think you have greater certainty from a rules, regs, and laws perspective, independent of what happens within the next administration. But as I'm sure you know, and I'm sure you can guess, look, US politics can be volatile. I think especially right now, there's no shortage of things that are happening both on the political and geopolitical side. And so I think you will see market participants look at midterms as a barometer in terms of where things go. And my hope would be you would get those bills and legislation through before then. I think to the extent that happens, I feel pretty good about the momentum of the space, but things can change quickly in crypto, as you know.
What's the vibe in DC? Like, how do you feel about the midterms? What do you think is going to happen?
Good question. This year's been funny. Like looking back, there's been no shortage of macro activity, geopolitical activity. Even if I rewind and think through January, the ups and downs that we saw both in crypto and traditional equities, it's been a little bit of a roller coaster ride. But I think at this point, we're obviously at or close to all-time highs in both stock market and BTC. So it's been a ride to basically get there. The reason I give that context is like, look, I think things can shift very quickly. Right. I think that the administration came in and had their policy agenda that they wanted to get done and they believed in, and they pushed that pretty aggressively at the beginning. I think that what you're seeing right now is on the crypto side, some bipartisan momentum to push and get things done. But at the same time, look, we've got a year and a half still till midterms. I think there's a lot that can happen over that time frame. So I think it's early to say at this point. My hope is that we get more bipartisan support and momentum within this space. But like I said, things can shift on a dime, and we'll be watching out for what happens here.
Okay, we gotta go on poly markets to get a more quantitative prediction about the future. I appreciate that. And yeah, I mean, I think the Genius Bill was bipartisan effort largely, and let's see how that continues to kind of like play out. And maybe we can briefly double click on stablecoins. I think you've had this tweet recently, which I've looked at as we were prepping the episode where we came to say, hey, I think people are confused about the use cases that stablecoins are actually good for. What does that take about, and like, what's your view on what's happening in the market right now?
Yeah. So if I remember that tweet correctly, it was in reference to some of the speculation around like large US consumer companies accepting stablecoins.
Yeah, it was like Uber is exploring stablecoins.
Yeah. Look, here's my perspective on the stablecoin side of the space. I think we've obviously seen significant momentum and growth in that market, both with Tether and USDC basically compounding their overall market cap over the previous years and hundreds of billions of dollars that are locked in stablecoin instruments. And from my perspective, what stablecoins are is basically the first demonstration of tokenization at scale, with just the tokenization of fiat currency on chain. And if you double click what's working well, what are the use cases today? I think one of the primary and most interesting use cases for stablecoins is the ability for people globally to hold US dollars, specifically for people that are in emerging markets that may have higher inflated currencies, that may have capital controls in their own markets, to basically have an alternate option. And we see that in our own data. Like FalconX serves as a liquidity provider to different what we call retail aggregators. Those are investment applications, payment companies, different players that are basically servicing retail end users around the world. And what you see is people in emerging markets that will purchase USDT basically to hold dollars as an alternative to their local currency and largely as an investment product within that. And I think that's a super interesting and compelling use case to give people more financial freedom, the ability to basically access these different fiat currency instruments. I also think that we definitely see a use case as it relates to cross-border payments and B2B payments. From a FalconX perspective, right? Like we settle a ton of our transactions in stablecoins, nights, weekends, different times when the traditional banking system isn't open. And if you're sending a stablecoin transaction from the US to Hong Kong versus like sending a wire, like you get speed, efficiency, and cost savings within that. And so I think those are great, super interesting and compelling use cases. My personal perspective here, I don't think that like a consumer in the US or developed market, that like consumer credit cards I think those are actually pretty strong products, right? I basically pay like 99 to 98 cents on the dollar for everything I get because I'm effectively getting paid back for these instruments. I get free uncollateralized credit line within that. Like, why would I want to use cash as an alternative? Right. And so I think that's what I was basically mentioning there. That doesn't mean that in emerging markets, there's not a really strong and interesting use case. But I think that at these, kind of peaks of euphoria, we can think that aspects of this technology are going to take over everything. Maybe they will. I'm personally a little bit skeptical on some of the consumer use case sides.
One of the FalconX co-founders, Prabhakar, started a new company around OpenFX, which is kind of a stablecoin prime broker, right? A stablecoin liquidity network. What is he seeing that you are missing? What is he seeing that FalconX wasn't able to capture today?
I don't know that I'd say there's anything that FalconX wasn't able to capture, right? Like we're definitely active in the stablecoin space, right? Like we've traded tens, if not hundreds of billions of dollars in stablecoins. And where we've focused within that side of the market has been both enabling that for settlement, use cases, collateral use cases for our customers, things that increase the efficiencies of their strategies. But we also work on the back end as a fiat on and off ramp in a number of different FX currencies for our customers today. And so we have a live FX business that's basically quoting a number of different fiat currency pairs to enable people around the world to basically get access to stablecoins or to other crypto for that matter. And we are seeing significant momentum there. So my intention is not to say that like we're not bullish stablecoins. I think at a firm level, we definitely see a lot of momentum and interest within that. I just personally am skeptical that like all of the consumer use cases basically take off here, specifically in the developed markets. I do think that there's really interesting B2B use cases here, and we're actively playing there and have been for a while as well.
Appreciate that. Let's look at your journey at FalconX and specifically double click on a topic that many people kind of talk to us about, something that you were irrationally passionate about. Right? We've had a number of folks during these reference calls tell us that Austin is an M&A freak. He loves it. What was the best deal that FalconX has ever done on the M&A side?
Man, irrationally passionate. I don't know that I've been described that way before on this topic, but I'll take it. Look, I think that if I take a step back and I look at this market, our belief is that we will see continued consolidation, both in private and public markets in the crypto and digital asset space, right? And I think within that, if we fast forward to looking at the end state in centralized crypto in 3, 5, 7 years, whatever that time frame is, I think that you probably see a consolidation where you have fewer market participants that are servicing global customers with a broader range of product offerings. Because from an end user perspective, like an end institutional perspective, what they want is like a single platform for them to be able to be active in a broad range of different, of their crypto activities. And so the reason I say that is will continue to be increasingly active on the M&A side. We see a lot of opportunity in companies that are approaching us as they see, opportunities to both plug into a bigger platform as well as a path to liquidity for themselves. And if I think through the transactions and where we've been successful, I think one of the areas that we talked about earlier was the growth and scaling of our options business, Part of that has been catalyzed by inorganic growth. And within that, we acquired a firm called Arbellos earlier this year that was founded by Josh Lim and Shlang Tang, who are experts and, longstanding market participants in the digital asset derivative space. I think they've really helped continue to grow and scale our business. And we really think we're still at the early stages in terms of, being a defining company as it relates to both crypto trading, but crypto derivatives overall. And so it's been fun to be able to work with that team and to grow and scale our own platform within that as well.
Appreciate that. And if that was like one of the big wins, what has been the biggest miss, the company that you should have bought but didn't pull the trigger on?
Great question. I don't know that I can publicly state things on that front. You can imagine that a lot of the deals that we look at have heavy confidentiality components as it relates to, what we can talk about there. But look, what I would say is I think our job is to just really understand what we're trying to deliver to customers and what we're trying to deliver to both our current and our future investors, right? And if I think about within that, what we try and create from a customer side, like we talked about, is a broad stack prime brokerage platform that covers everything from trading, financing, and a technology platform that can basically bring everything in between, including custody and different settlement flows for our institutional customers. And so I think to the extent there's opportunities to accelerate and grow that, we will be looking there. And you could imagine that we would look at different companies that were in that space. And then I also think that there's an opportunity to expand to adjacencies where we may not be active today. As you can probably guess, though, like there's not that many crypto companies that are actually operating at scale, right? And so if you're looking to basically at assets that would have impact to a company like us, given the size and scale that we're operating at today, you're looking at a relatively kind of small target audience. And so we try and be flexible in terms of where we're looking on that. So I'm sorry, I know that was a little bit diplomatic answer as it relates to some of the misses, but I think our team's actually done a very good job there, and we're quite excited about the pipeline as well.
I appreciate that. I had to try. Let's talk about the FalconX equity story actually in a more direct sense. I think you raised around 2022 that valued you guys at 8 billion. I think the IPO window is more than open again, especially around crypto plays. How do you feel about the next step for you as a company, and how do you feel about the further equity story of FalconX?
Yeah. Look, I think our goal in its simplest form is to build a strong, sustainable business within this market that can capture the upsides of crypto, but is also protected on the downside from a volatility perspective and continues to perform during different market conditions. And I think largely we've been able to do that. And within that, maintain a strong balance sheet, have very positive unit economics and business performance over time. The reason I give that context is the goal within operating within this space, from my perspective, is to be able to be advantageous to approach both public and private capital markets over time. And so we'll continue to look on a go forward basis as to what's best for us, for the company. I think the market overall has been impressed with how Circle has performed in public markets. I think that it's been a very strong story for obviously Circle equity holders. And I think that most companies on the private side are probably looking at that and understanding, how that affects their own path to liquidity. And obviously from our standpoint, we're going to look at all the options that make sense for us from a company perspective.
So no clear date set yet, but I do appreciate that. On the kind of like protected downside thought, how does that look like during like 2022 crypto winters? How much did revenue drop during these kind of like intense periods of time?
So I don't know the exact performance numbers off the top of my head, but what I can talk about is basically talk about how we think about the different product offerings and products and services that we have, and how that enables FalconX to basically capture different activity really independent of what's happening within the market, right? Obviously, everyone in crypto has some correlation to the market, to the activity that's happening within the space, especially because so much of the primary use cases today are on the trading front in this industry overall. And you see that reflected if you look at the public markets here too. I think that as you're building a business like ours that has a significant trading business, one of the things that is important is be able to capture a wide variety of different trading activity and flow, right? So we have our principal business where institutional counterparties tend to trade larger ticket sizes with us. So if someone wants to come in and purchase $100 million in BTC, they can do that there. Or if they want to do bilateral options contracts, they have the ability to basically face us and trade those instruments. We also have our agency side of the business, which tends to cater to more systematic quantitative traders. And the reason I mention that is what you see within this market is during periods of lower activity, you tend to see less discretionary risk-taking activity, right? Less venture funds, hedge funds are coming in and saying, hey, look, I'm going to go long at X time period. But what you do see, independent of what's happening within the market, is systematic traders continue to be active in this asset class because there's a broad range of opportunities that continue to happen. And so I think our systematic agency side is over time has been quite resilient, independent of what's happening within the market. That's also why we focused on building a large credit business that enables our customers to basically borrow assets from FalconX. If you can imagine that business, a lot of that activity is actually borrowing for systematic traders to run their strategies across our direct market access platform too. And so what you tend to see is even during periods of lower market activity, there's still activity that's happening within the space. I think the trick in this market and in this asset class is it's very difficult to be a single product company and be able to withstand the ups and the downs of crypto. And so what we try and do is have multiple different product offerings that service multiple different traders and segments of the institutional population that may act differently or have different strategies during those different market conditions. And I think that served us well over time.
No, I appreciate that. I think you're seeing this from all directions and like all the different entry points into crypto, right? Where I've had Peter Stillwell from Coinbase on the pod recently who talked about Coinbase services, right? Which was an aggressively fast growing segment of the business. And there was this clear rationale of launching these service products to be multi-product, right? And to be more resilient against the ups and downs of the natural market conditions.
I do think that this is also a reason that derivatives are important in this market, right? And especially regulated derivatives. And if you look at that and why that is over time, I actually think that that's beneficial from a market structure and health of the market perspective. If you look at most evolved asset classes where you have healthy and robust derivatives markets, the hope would be that would actually lower volatility in the assets themselves, because what you're creating is different instruments for people to hedge depending on what's happening within the market, right? And so if you rewound crypto like 5, 7, 10 years ago, right, where it's an even greater portion of the activity was happening on the spot side of the market, right, you do see more volatility, right? But over time, as you get more financial instruments like ETFs, longer term holders and market participants, and then you give those market participants the ability to hedge in different market conditions, I actually think you can see less volatility in the asset class itself. And I think within that, also more durable revenue streams for different companies who are active within this space. And so that's one of the reasons that we've been focused on the derivatives market is like we think it's beneficial both from a business perspective, but we also think it's beneficial to our customers in the market in aggregate.
No, that makes a bunch of sense. I wanted to briefly talk about brand and marketing. People told us this was also something that you're thinking about quite a bit as part of your role of growing and scaling the company. I think FalconX has a somewhat low-key brand, I think, for the scale that you guys operate on. Is that intentional? How do you think about brand and marketing? What are the key initiatives you're excited to drive towards the rest of the year?
Yeah. I think it's fair to say that over time we've been a little bit low key. Honestly, if I look at the reasons behind that, look, I think that we are very strong within our core segment of market participants and generally institutions who are active within this space, at least know who FalconX is, and a lot of them are customers of ours already. And so I think so much of our focus is to be the best counterparty for those different market participants. And you can imagine if you look at institutional crypto today, you're realistically looking at a few thousand institutions that really matter within this market. And so I think so much of our job from a company perspective is to show up in front of those individuals to deliver value to them and make sure that we're known, our product offerings are known within that segment and within that audience. And I think in aggregate, our team's done a good job there. Now, if I think about like, okay, versus some of the big retail brands in crypto, I think part of it's a reflection of we're just servicing a different target market, right? Like we're not marketing to millions of end retail consumers, and we're probably not as loud because of that. I do think that over time, we do want to increase our voice, our presence within this market. And you'll see more and more from us on a go forward basis as we continue to do that. From my perspective, the interesting elements there are, especially as you're seeing more net new institutional players come in, right? Like a few years ago, the idea that we'd be actively trading with GSIB banks, right, was like out of the realm of possibilities. Same thing with like tier one traditional asset managers. Those guys were just not close to active within crypto. And so I think part of our job today is if you're looking at both in the US and globally, many net new institutional players coming in, we need to increase our presence a little bit On a relative basis, we're probably a little bit quiet versus our size and scale, but I think we're decently well known, at least within our target audience. So that's why we're doing stuff like this and talking to folks like yourself. And if you have any other ideas, I'm always game to hear them as well.
We can brainstorm a bit. But so we've talked about product expansion and like as we unpack the growth and the journey to 10 trillion of FalconX, right? We've talked about product expansion, derivatives. We've talked about inorganic growth, M&A. We've talked about marketing. Let's briefly talk about partnerships. I think you've had a couple of interesting things come up recently, right? I think you were one of the first partners of Cantor Fitzgerald for Bitcoin-backed lending. You've briefly talked about the credit business just now and how that's part of like a resilience strategy. What are the most exciting partnerships you've launched? What is coming up, and how do you feel about these plays?
Totally. So yes, we've done a number of partnership announcements recently, including the Cantor deal that was announced. We also announced a partnership with Standard Chartered to help grow and enable different use cases for our clients across both the FX desk and broader FalconX product suite. And then we have a few others that are kind of pending in a similar category with large traditional financial institutions. If I think about the goal there from a company perspective, in its simplest form, we're seeing a lot of net new market participants come into the digital asset space. And I think what FalconX can provide them is broad ranging distribution to the largest institutional audience that's active within this market. And so we've had a lot of conversations with net new companies, players that have broad scale distribution in traditional markets, but maybe looking to move into this asset class and understand where there may be collaboration opportunities. So that would be one on the TradFi side, basically plugging into our distribution size, scale, ability to basically distribute, and for us, adding additional product offerings for our customers. Two, I would also say we're focused increasingly on the crypto native side and see so much room and opportunity for us to collaborate, especially with different protocols, foundations, and market participants as they are, growing and scaling their own ecosystems. And so we have a few things that are basically in the hopper that we'll talk about in the relative near term there. But I think that our goal is to continue to be at the forefront of crypto. That's on the traditional finance side, but it's also on the crypto native side. And we're quite excited about some of the innovation, what builders are building on that side of the space. And I think can be useful from a distribution angle for those market participants too.
I appreciate that. And thanks for kind of like running through the future of growth at FalconX. Looking at the time, I'd love to jump into a short round of quickfire questions. I'm going to ask you a bunch of short questions, and the challenge is to answer them in kind of like a sentence or less. And I'm going to start out saying, like, if you were the CEO at FalconX, what would you do differently?
Not much. I think Greg has done a great job. So I work closely with him and I think he's crushing it.
Fair. What's the biggest short in public markets right now that no one is talking about?
Biggest short in public markets right now. I don't know, man. I'm mostly focused on the crypto side today. So I don't know that I have a great answer for you there. I don't know that I would short much though. Like I think that we're entering favorable market conditions, interest rates, positioned to drop. I think markets pricing in increasing higher percentages through end of year. And so I think I'd prefer to be on the long side.
This is good, right? Like we're all optimists. Do you think Circle is overpriced?
I think it's really hard to price like an asset like that. Like I think that what it's captured is basically a narrative right now. I think that the relative valuation between Circle and Coinbase probably doesn't make a ton of sense. And so I would expect that you would see some sort of harmonization between those two. I don't know if that means Circle goes up or goes down or Coinbase goes up.
Yeah, I think we've all seen these kind of like back of the envelope math things where it just doesn't make sense. But yeah, we'll see what happens there. Regulatory clarity or product innovation, which moves the market more in the next 12 months in your space?
In our space, I think it's actually the regulatory side. I think it unlocks a lot of capital that will come in. My hope would be that actually unlocks net new product innovation because you have builders that can build a broader range of different applications. I do think the product side is super important too.
One crypto regulation that you would immediately rewrite if you could?
I think the main thing from my perspective that we will get clarity on, but I would like to get it faster, and I think it's held up the space, is basically this question of security to commodity and when that happens. I think that if the market can get that, and if we can actually understand or clear guidelines on what falls within each category, registrations around them, that's what I'd love to see. And then I'd love to see like a delineation between different market participants who are active within this market today. I do think that a consolidation of all activities into some single entities introduces risk into this space. And so I think regulation that can define rules and responsibilities within this market would be in aggregate good on the institutional side where we play.
Which financial or crypto regulation would you double down on? What needs to be stricter instead of relax?
I don't know that I've anything stricter. I feel like they're doing I feel like they've the space overall is basically seen, like, I think we've seen no shortage of heavy-handed regulation. I do think the AML side is important, right? Like, in terms of what we actually want to protect against and making sure that we're building a thriving market over time. And so I think it's important to have those components. And then I think things as it relates to like fraud and other unsavory components of the market are important too, because what I hate to see is like some of the bad, or when those situations has happened, like it's burned people and some of them don't come back. And so I think it's important to basically protect the market, and I think that's what regulators' job is to do there.
What's one thing traditional finance still does better than crypto?
I think brand and trust is probably a lot better in aggregate with the institutional market. I think part of that's a reflection of the fact that these institutions have been around for hundreds of years in some circumstances. And I think that our job in building in crypto overall is to bring more trust through technology to that. I still think there's a lot of work for us to do.
Well, time to build. Let's get to work. Austin, thank you so much for joining me. This was an amazing conversation. Appreciate you taking the time. And to everyone who was listening, thanks for tuning in, and see you soon.
Likewise. Thanks, man.